Okay. Okay. So welcome. A very good day, good morning, good afternoon to some. And welcome to the Sunday's Bretton Commodities session. And we'll be going through Brent oil, US oil, gold in particular, as well as other commodities that we can actually talk about as well. So this is basically where we will talk about the movements and what is to expect. But one of the biggest things to talk about is actually the fundamental side of it as well. So not only the technical side of it, the fundamentals, the geopolitics, the various elements that actually move precious metal, especially like gold as well. So in a lot of theories as well, a lot of investors and traders, they don't really classify gold as a commodity. It's classified under different dockets as well. So it's actually quite complex the way gold works. So that is why it still is going to be the preferred way of preferred investment vehicle for lots of investors and traders out there, including myself as well, especially physical gold and all that. So I'll be running a course specifically on studying gold. It's a certification program as well. That is where we can actually get quite a lot of information on what exactly goes on with gold. It's very, very complex. It's not only about the technical movements. It's driven a lot by the US, what US does, and almost everything that US does with its bond, its yield, its repurchase programs, and a lot of things. So one of the things that I would like to share is that there has been a little bit of a change in the market, financial market, and that impacts gold to a very, very large extent. Now, this is called the reverse repo program that the Federal Reserve actually does. So the Federal Reserve buys assets, but then it buys assets as well from commercial banks and all that, but sometimes it reverses the repurchase program. So it's got two types of buying and selling that the Federal Reserve itself actually does. So this is where it does the reverse. So if it just purchases assets, usually it pumps liquidity into the market. Okay, but because it has been very, very busy in reverse repurchase, it has actually drained and taken liquidity out of the market. And this is what we are going through at the moment. Now, this is an article from FX Empire. We have got loads of articles and news talking about the same thing as well. And this is where it actually impacts gold directly. So if it actually does just the purchase program, usually gold's prices can go up. But now it's doing a reverse repo program, and it reaches almost 1 trillion. It basically pulls the gold down, and that is why we have seen gold actually reversed and gone down quite a lot, right? And that is it was a little bit difficult as well to explain from that angle to the traders, because this is a very complex subject. We need to actually do a little bit of a training and a course to understand negative interest rate and how the Federal Reserve works with the bonds and the yields, and also with all this purchase program. We call it a repo. So that was what has actually brought this one down to this level right here. Okay, so this is gold basically at this level, and that was the reason why it went and touched that there, mainly because of the reverse repo program that the Federal Reserve have actually run. So because of that, a lot of traders wouldn't actually be familiar with what the Federal Reserve is doing to pull down the price or to increase the price. So, but the situation now is that whether or not they have finished the repurchase, the repo repurchase program, which basically means that some of the investors and traders, I mean, quite a big number of them believe that the Federal Reserve have not done enough yet. That means it might pull the gold price down further. So this is the part that we are not sure until we see price action first. So this is what it's called. You see, it's called the Federal's reverse repurchase operation, and it has been increased, it says, and at the very end of June, it actually reached 991.9 billion. So this is pulling liquidity out, and that is why we can see, sometimes us as traders, as retail traders, we sort of notice that, it's not really very active, the market and all that. Is mainly because of this, and it has actually pulled liquidity. When it pulls liquidity out, volatility falls with it as well, and that is why we see we've got only certain pairs that move at a certain time, and it's not like very active. And this is one of the reasons as well. So this is the fundamental side of it, that if we understand it, we can actually predict the price of gold quite well for the medium and the long term. And this is how the big boys trade. They trade one time in 6 months, 1 year, and they just leave the trade at one direction, mainly because of the fundamentals side of it. So here it's also said that usually when there is volume of purchase and all that, there is excessive liquidity, but now it is having a little bit of a difficult situation. And this is where it says abundant liquidity that becomes a hot potato as well. Slow real growth sound like positive factors for gold, which like stagflation, it's called. Now this is when it sort of work in a normal way, but at the moment it is actually not really working in the normal way for gold, mainly because they have done the negative, the repo repurchase, not the purchase of assets with the Federal Reserve, you see. So this is basically what's going on. But just to give us a little bit of an idea, because tomorrow onwards, basically I'll need to monitor a lot of prices of gold in different area, but I have got it sort of giving you the hint that the Federal Reserve and the big boys, big banks all over the world, as well as the one in the States, they have been looking at a very important price, and that was 1760, okay, 1760 for the price of gold. And because they do watch a very different type of index, it's called the HUI index and various others, right? Because they are long-term, medium to long-term. So they set the trend 6 months, 1 year early, actually, and then we write that trend, and then we write the corrections as well. So here at this moment of time, it has gone above the 1760 price, which is sort of like a very important global price point, and that basically gives us an idea that it has room to go up for now to 2 touch points. There are 2 resistance level that that price of oil for the shortest and medium term, it can actually go up to the 1790 or as high as the 1800, and then it will rest for a while before it thinks what to actually do, because as it rises above, there are more resistance and very, very important resistance as well that form a sort of a double top, and that was at 1827, okay, or 1828. So that is another area I would actually color it red. Now, I'm actually just speaking for the shortest term because of our retail traders at this moment, because everybody wants to know buy or sell, right? Tomorrow, whether we actually buy or sell gold. So that is the most important. So bigger traders and investors, they don't trade that way. They basically look at the fundamentals and they pump in really big, and they leave the trade 6 months, 1 year, sometime 1.5 years, 2 years. It depends on how big they are. The bigger they are, bigger the investment, the longer the term that they would actually be trading on. So here, for example, for us retail traders, I go back to the 4-hour chart. right here, we can actually see that we, from all the things that are going on with the news and everything else, research that I've actually done with the Repo program and everything else, it looks like, yes, the gold can go up for now a little bit more, but it might actually correct and go downwards quite a lot as well, mainly because of what's going on with the Repo program. So at this moment of time, retail traders, when we are looking at the chart and everything else, everybody will think that it is great time to buy. Yes, it is great time to buy for the shortest term, mainly because it is heading towards 1790 or 1800 to actually make these levels as the proper area for resistance. And this is what the big eyes and big boys, the big eyes of the big boys are looking at this level, and they already know that the retail traders will actually help in pushing the price upwards, and then they would basically pull the price down at this resistance level. This is also a psychological area, 1790 and 1800, but the 1760 is a psychological level globally for the support, and that is the part where it has actually gone up and sort of confirmed that it would most probably go up from now, but it has areas that it would probably be resisting, and that is as early as 1790 and 1798 and 1800. So I've got 3 lines now here where it could possibly reverse. So what I'm looking at from the patterns perspective as well is that it does actually sort of give me the probability of it to fall quite a lot. So I would be looking at my A point from here, not down to the spike price right here, but to this bottom right here. Okay, because this is also a very, very important level of support at 1717. So if I pull my Fibonacci from my A point, presumably the A point here, to the B point, I can see that if the prices were to go up to where we are predicting at 1790 or 1798, they are still very good Fibonacci level as well. So if it goes up and then starts to reverse at 1790, that means the C point would actually be at the 61.8%, which is a very good area. If it doesn't, and then it continues to go up a lot more, then it would most probably go up to the 70.7 Fibonacci level, which is at the 1800 area. Okay, so this is basically what I look at happening. And if at all, let's say example, it goes up to that level at 1790, then that becomes excuse me becomes a C point. Then it has, excuse me, I'm still on the cough, but still much better. That basically means that the D point of where it could actually fall, this is based on the 4-hour chart, could potentially be as low as 1676. Now, if I go onto the daily chart and I look at the D point, I can see it is exactly at the support of the double. Okay, so that basically means that yes, there is a possibility or probability for it to, for now, as of tomorrow onwards or day after, for it to actually go up to 1790 before it hits down to 1676 area. Okay. Okay. Excuse me. So that's basically it. With the price of gold at this moment of time, this is most likely what could potentially happen. I'm just mirroring of what potentially could happen in the fundamental side of it first, and then I see what could potentially happen in the technical side of it. In technical, it sort of mirrors the expectation of price of gold to go up to 1790. And now it is exactly meeting the 100 exponential moving average as well at 1780 area. So it is at 1780 right here, another $10 to 1790, and that is the area that we project to the upside for gold. Okay, so this is it. This is what's happening to gold at this moment of time. On the fundamental factors, we also have, let's see whether I can share this here. Where did I put it? Give me a second. Yeah, we've also got minus here. It says celebration time. So basically, there's a lot of production of gold. So when you've got a lot of supply, obviously, the price would actually fall with it as well. So that is for the month of June onwards and stuff like that. Have experienced some decline, but also production to actually go up. That's why it says gold minus celebration time. So it has a lot of correlation with what we're talking about with the repurchase program as well, that has pulled the price down. Oh, sorry about that. Okay, give me a second. I'm just going to get a drink of water. Give me a second. Okay, I'm back. So a little bit better now. So yes, you can, but whenever you want to place the order, always look at the candles as well first, okay? Because when you are monitoring it, look at the candles as well, whether it is moving. So it makes no sense if you are doing the pending order or doing whatever without looking at the chart as well. So if you look at the chart, and the chart is actually it start to reverse and drop, basically you don't do anything. You don't do a pending order for the buy, right? You want to do the pending order for the buy or for the sell when the direction of the candles and the body of the candle is actually showing you it's doing what it needs to do, following your direction. So what I would like to do before I do the pending order is tomorrow, before you do the pending order, you want to make sure that it's really moving up like this and not reversing. So if it is reversing, you obviously don't want to do the pending order yet because it's reversing. So if it is actually on the way up and it's still showing like bullish candle with the bullish body, then yes, you do the pending order. Okay. So yeah, this is it. We have to actually look at the current candle. So if you're looking at, it's best to look at the 4-hour chart and the daily chart as well to see, because sometimes we look at the 1-hour chart, let's say, and we see that the candle is bullish and it's on the way up, but you need to also confirm whether that is a bullish candle as well in the 4-hour chart. If you see the 4-hour chart, the body is actually quite good, bullish, and then no wick, and then you go to the daily as well, and it's looking very strong on the bullish candle, then yes, you've got a better likelihood, a probability for it to actually go up. But sometimes you see it very bullish and really nice in the 1 hour, but you go to higher time frame, it's not a bullish candle, it doesn't match with the 1-hour chart, then don't do that order, okay? Because it is already giving you the hint that it is just for now, for the next 10-15 minutes maybe, not even the 1 hour, following the 1-hour chart. Even though it's in a 1-hour chart, it is actually working on a 30 minutes frame. 4-hour works on a 1-hour frame. Daily works on a 4-hour frame. So it's all one time frame down. So that's why we are looking at one time frame up to actually balance that downward time frame zone. Okay, so if I'm looking at 1-hour chart right now, yes, each one candle moves in 1 hour, but the reality is that it could be as short as 30 minutes to 1 hour actually. Okay, so it's the shortest period of time. Okay, so that's basically, is that clear, Alfred? Yeah, it's okay. So this is really important. Okay, when you are doing the pending order, you need to still check the status of the candle at the time. Okay. All right, good. So, but not for sale, actually, yeah. Because we're talking about gold at the moment, right? So gold, as we have said, it is buy. Yeah, exactly. Because it's a bullish at the moment. We have we have talked about the area of 1760 has gone above 1760, but now it's on its way up, but it has got resistance level. That means you have to exit at 1790 and below. You can buy at any time. As I've mentioned to you, you'll buy your entry anytime when we're talking about it anytime, but your exit is very important. Okay. All right. Okay, so make sure you do whatever you want at any moment of time tomorrow, because your time difference with other traders very different as well. Your goals, objectives, style of trading with your indicators, everything is very different. So we don't share the entry and the strategies. So entry can be anytime anybody enter, right? And then we see the trend for everybody now. Okay, there is a good chance to buy a little bit, but there is a resistance. So a lot of people may be entering, maybe we all enter the buy, the direction is the same, but we may all differ from exiting. Some may not want to exit when they buy tomorrow. Some will just wait as soon as the market open and buy, and don't want to actually exit at 1790 because their indicators and their strategy would actually be different. But all I can share is that there is a resistance at 1790. Whether you want to take that as an exit price or not is entirely up to yourself. So all I can actually share is what I think is happening from the fundamental side of it, what is happening in terms of price action in the technical side of it, and the risk of leaving your trade open. If you are buying tomorrow, leaving your trade open will give you the risk of a reversal at 1790 or 1800. That's basically all I can actually share. So for those who wants to follow that and exit there, it's entirely up to them as well. So if not, then they might have, because I could be wrong too, you see. So I could be wrong that it wouldn't actually reverse there. Maybe it won't reverse at all, and maybe just shoot up and go up as well. So that's always a possibility of that. That is why it's a probability, not certainty. So yeah, I just can point out 1790 and 1800 as your potential risk area that you need to be aware of if you're buying. Yeah, 100 pips to hit. Yeah, it's got a reason as well, as I've mentioned earlier on, right? It's the repurchase repo program that the government Fed is still actually doing. So that is why it is not, I mean, in the eyes of the investors, it's not a big move for 100 pips. It's not a big move, especially if we have got resistance area already there. This is a psychological resistance level, 1790 as well. And also, if you pull the Fibonacci, it's at 61.8 as well. So that is quite a very, very significant area to watch out for the resistance, for the correction. But the good news is that it has already gone above 1760, pushed up there by the big boys, 1760, showing that there are some areas to actually buy later on. So they want to also maintain cheaper price for gold for future buying, you see. So yes, it will go up and all that, but it's going to take some time. Okay, it's going to take some time, in my opinion, only because, as we have talked about as well, the support and all that is actually down here at 1676 area. You see, that is where they can actually buy even cheaper as well. Also, if I look at the timing of the buying, it might actually match with the end of the year buying, which basically starts September end onwards, October. There is a lot of movement of buyers from India India, especially getting prepared for monsoon wedding and all this kind of stuff. So it's usually a trend to actually have that. So if we look at the potential of it to drop first and then a very big push, even not only monsoon wedding November time, but also Christmas time. So there is a good time to actually buy and keep buying when the price of gold have actually fallen quite a lot. So they can actually buy cheap, you see. So here, this is what I see could potentially happen. So even in the long term and all that, we can see all the supports down here. So yeah, this is what I can see happening, but it will be progressive down, and then you've got some uptrend as well and things like that. But this is just overall picture of what potentially could actually happen. But of course, you know, retail traders like us, we are more concerned about what's happening day to day, right? So, but the day to day actually can actually happen from the overall big picture as well. So we are looking at mother pattern in the longer term, and then baby patterns. So the baby patterns are actually little traders like us trading the baby pattern, but then the overall picture is actually the mother pattern and the big picture basically. So the big picture is, yes, it will have a lot of rise, but at this moment of time, from short to medium term, it looks like it needs to fall a lot more with a lot of fundamentals that are actually going on. But at this moment, as of tomorrow, for the whole week, it might actually go up to the 70, 90 area. But we just need to confirm that if it does go up and reverse either 1790 to or 1800 and start reversing with a few candles down, then there is a very big likelihood it wants to drop all the way down, especially after it drops under 1760 again. So maybe you might find support here again and then go up, and then a different pattern will actually come. So it all depends on what happens at 1790 and 1800. If it reverses, then we can sell some more. But if it goes under 1760, then it has a very big probability for it to fall down to this area right here at point B, okay, here. Then after it goes 1721 and under, then it will have a very big possibility to fall all the way down to 1676 and then find support there. So here I will color it blue to indicate a very significant support. Of course, it's a long way down, but at the moment, a little bit of buy until 1790, see what happens, and then you write accordingly the trend for the day. Okay. Okay, so that is for gold. We want to take a look a little bit on oil. Let's go to US oil first. US oil, we want to watch, again, there's a lot of geopolitics going on, but we want to watch the level of 65.20. As you can see, you know, in the news, in Bloomberg, CNBC, and various others, they have actually indicated the bottom, double bottom right here, and it is also available on the chart, so we will take a look at the chart as well. And this is basically a very positive upward type movement, bullish prediction. So there is more bullish prediction for US oil at this moment of time. This is September 2020, right to at this moment of time in August 2021. So you can see that they're using the 100-day moving average. So hence the reason I've been using for more than 10 over years the 50, 100, and 200, also because these are lines that has been used all the while, over 50 years already, by all the major investors and traders. So it gives you that very nice movement, showing you uptrend all the way for crude oil. In other words, we are expecting uptrend as well, but we as retail trader, we want to trade bit by bit, day by day, right? So, but we need to watch out for the 65.20 level. If it goes above 65.20 or under 65.20, that is sort of like a not break even point, but like a pivot type level as well for oil. This is US oil. So if we go back to here, we go on to US oil, we can see that let's look at 65.20. Okay, now it's at 67.83, so it's still above, so it's above still 65.20, so that means it's still in the bias of bullishness, right? So we mark that area 65. Okay, so this is basically it. So 65.20 is way down here where the support, where it has actually been supported, it dropped and then support and went up, right? So here, for example, we are seeing that 67.83 where it has closed as of Friday still is way above 65.20. So as it comes downwards, it might actually find support for US oil. We're looking at the 4-hour chart right now, and it might find support at the 67.18. Now, the thing is that we have managed to actually use psychological numbers for oil trading, both Brent and US oil, quite successfully. So at this moment of time, it is trading exactly at 67.80 psychological level. So what that means is that it could actually reverse at any moment of time. So if we look at the potential for the sell to come down, let's say if you as a trader want to actually sell, you see that your indicators, your dots are also giving you hints that you can sell. Yes, you can actually sell at any moment of time because that's your entry side of it, but I'm more concerned about the exit. So the exit should actually be, if you are to be selling, you can actually either exit right now, or you can re-enter your sell at 67.70, right? So if you enter your sell at 67.70, then you can actually take profit at 67.30. All right, so here 6730 is basically above the 20 psychological level. So in other words, whatever you do, whether you want to leave your trade open on the sell if you're already selling and you don't want to exit and re-enter, you want to just leave it as it is, then make sure you exit at 67.30 because it's quite a strong level of support right there that might actually bounce upwards. So that is that is the take profit area 67.30 if you are selling at this moment of time. Okay, this is for oil, US oil at the 4-hour chart. But if you are not wanting to sell at this moment of time, then because what could actually potentially happen as well is a bit of a reversal at this moment of time as market opens tomorrow. That could also happen. That's an alternative scenario. So it might shoot up, but not sure shoot up until where exactly, but there is a likelihood for it to shoot up to this level at 69.20 psychological level. So that is also a limit area because it's very, very strong. These are very strong level of resistance here. It's got the opening price of a bullish candle right there, also previous resistance of this area. So 69.20 is a psychological level to watch out for if you are not wanting to ride the downward. You believe as well it might go up. Yes, it will go up, but make sure if it does go up and you are buying to actually exit at 69.20 before it reaches 69.20, 69.10 preferably, but 69.20 is your psychological level for the US oil. Okay, is that clear for oil at this moment of time? Okay, so the big boys and the big picture, it has level of support, as you can see, at 65.20. There might be a bigger likelihood for it to actually go down much more as well, because we are in the daily chart. It's a little bit clearer. We are actually trading, or the current price is actually in a bearish zone right here. So let me just change it to red again. Slightly deep pink. Okay. So there you go. So this is basically how it's trading at this moment of time. And it is still in a bearish zone based on this bearish candle right here as well. So in terms of direction, I am more biased to the downside for oil to actually reach the 66.50 psychological level. And that is basically where we might see whether it wants to go down more or not, but it looks like a double top kind of thing right here. So if it does come down here, start to reverse here, then it confirms that double top that it wants to go up. But at this moment of time, I think further fall is expected until it reaches this area, whether it's 67.20 or 66.50 area, for it to actually really bounce up again and then to go up from there. Yeah, this is basically what I see. I also see a potential W-like pattern up here, which is a reversal candle in general. This is for US oil again. So here, if I were to push this up, it's almost the same area. Maybe you'll go up a little bit more, but reversal to actually happen at this area right here. So I see a potential from a very big pictures perspective, a W-like pattern, which basically means it would reverse at some point and then go up and up and up, but then to reverse and go down a lot and not go beyond this area right here. So we need to marry it with fundamentals as well. But at this moment of time, for traders like us, retail, it's probably best to look into the trend. At this moment of time, it's biased to the downside for us to actually sell, for it to reach 66.50 area at least. So whatever you do, if you are selling, it's best to exit at 66.60, okay, for the longer term. Okay, so that is your box, newly drawn box right there of where it's trading, but it is trading in within a sell zone. Okay, that's US oil. Now, what's happening to, you can see it's quite similar. This is US oil, right? Look at this big movement up, come down, double bottom right here. Then I move on to UK oil, move up, down, double bottom as well here. So it's very similar, right? So here with UK oil, I would like to share some support and resistance for Brent UK oil. Now, this is for UK oil, some resistance levels right there as well. You can actually screenshot this as well so that you can refer to it, or you can pause your video when we send you the recorded version. But this is resistance levels and support levels for crude oil. I just didn't have much time to put all these levels onto the chart, but these are the ones to watch out for. So you put all your resistance levels, horizontal lines in a red, let's say, and then all your support in blue. Okay, so that way you can actually look at how to actually trade within the support resistance line. Okay, so let's say it's going down, but let's look at where the price is at this moment of time. So what I would do is, it's probably best for us to just clear up everything. This is UK oil right here. Okay, we clear up everything like this. Okay, and let's say 69.95 is the price. We're expecting it, let's say, to go down, right? So let's look at let's look at price action right now. As far as it can actually go, look at a bullish candle right here. So I have got a bullish candle here. Okay, so I need to watch out for this area right here based on this bullish candle. This bullish candle right here, as it starts, also reflects this one. So I push up a little bit right there. So that basically means that if price were to fall, it might find support at 69.25. Now, this is based on the candles, the mother candles and all that, right? So as it falls further down, I see that it might have this area right here as the support. I'll also respect these other smaller candles right there, but I want to push it up a little bit. Okay, that's at 68.63. This is 69.25. Okay, so these are the support area based on price action of the candles itself that we can actually see on the daily chart, right? This is for UK oil, but we go back to this area. Current price 69.96, let's say. So 69.96. as it drops down, okay, so 69.96, as it drop down, it will actually drop down to this closest price here as a support, so 67.35. So 67.35, we need to mark it here. So this is 67.35. Okay. So we're using that table right there to give us a hint of where the support is. 67.35, if I'm not mistaken. Let's see. 67.35 as of 19th of July's low. So that is the support at this moment of time. We want to look at these prices right now for the support because we are looking at the potential of Brent to fall, right? So as it fall, we always need to think where we need to exit, where is the support, because we cannot get excited with the current move. So if you are on the selling, you cannot get excited with your selling. You need to get excited with where you exit so that you can make money. Right? So if you are thinking, oh, it's going to fall and it's going to fall, and you are just concentrated on the falling and the falling and the falling, without exiting, it's like you are in a building that is having a fire and you're not planning your exit. And then, you get into trouble because because if you're thinking that building is really safe, really safe, really safe, you might not want to go out yet. Then it might be a risk because the fire might get as big as you won't actually even expect. So this is exactly when you're actually trading. When you're trading on a sell, and yes, it's looking fantastic, it's falling and falling, you cannot get excited with the falling. You need to get excited with your profit that you are making, but when to exit your profit. This is how you make the money. If not, you'll get into trouble. Okay, just picture a burning building when you are actually in a trend. When you're in a trend, you're actually in a potentially burning building as well if you don't exit. Okay, so 67.35 is what has actually been given. So it could actually go right there, right? Support. But don't expect it to just go down all the way. And if you're already making money, basically tomorrow, let's say you're selling, and maybe you can actually exit and re-enter. You can exit your 60 at 69.25, let's say, and then you re-enter again at 69.20 and below, and then you take profit again. Then you see that it falls with the mother candle as well in shorter time frame and in medium time frame and in long-term time frame. Then you actually just ride the trend and keep entering, and then you sell as well and then you exit at the right prices as well. So that would probably be a safer, better way of trading. Okay, and that is basically it, because it's very difficult to just guess. I mean, there is a probability it will fall, but whether it will fall exactly as where you think it would actually fall, we don't know. But it may fall, but it may actually fall after correcting. So best to follow the market. If the market is correcting, you exit before it corrects, and then when the market goes back to the direction, you enter the direction. That is basically a better way of actually trading to reduce your risk. Okay, and yeah, that's basically it for UKOIL at this moment of time. I'll just show the table again. These are from the news as well as various others. It actually sort of mirror from various sources, resistance and support level that the big boys, the big mainstream media, Bloomberg, CNBC, they all are talking about levels like this. And also when they have OPEC meetings as well, very close. All these numbers, prices of oil is very, very close, especially with Brent crude oil. This is Brent crude oil's pricing as well that I've actually watched the news a couple of times, and I've noticed that I've written all the prices down at some point, and I see that it's only a couple of cents different every time they talk about certain levels, and I see that these six prices, 3 on the support side and 3 on the resistance level, has been really very, very good levels to look at as support and resistance for 2021 until the end of this year, because it's all very, very recent as well. Okay, all right, so this one, you want to screenshot this one. Is quite good for Brent oil, because it's going to help us to actually identify prices. Okay, there were some traders in Colombia and Peru, I think, yesterday. There's a big group there. They are very interested in platinum, but they are trading physical platinum and silver as well. And basically, we're looking at platinum, and we can do a little bit of an analysis from the technicals perspective. And from the 4-hour chart itself, it's looking like it's finding a lot of resistance already, and it is correcting to the downside. But it's got this very nice, I would say, flow to the downside. So for those who are trading platinum physically, they wouldn't be gaining a lot from their investment into physical, what do you call that, selling, physical buying, because they are buying, they're only waiting for the price to go up. So they'll be actually sort of reducing their value of investment at this moment of time if they were to be physical platinum traders, right? So the physical platinum traders, if you were to actually trade platinum CFD, like how we are trading right now on the MT4 platform, you would probably be able to make some money instead of losing money if you were to actually sell your platinum on this platform. Okay, so some of them I know, the traders from Peru especially, that's why they are not attending this session, because it's totally different time zone and it's not convenient. So I'll be sending this recorded version to the group of 2,000 traders, I think, in Peru, Colombia, Latin America. So they are very big onto physical. So now we are talking about trading CFDs basically, and it would actually be of benefit to them a lot if they are trading not only physical but also diversify their portfolio to actually trade on the CFD. So this is platinum, and platinum, I think it's got a good potential for a fall. That is why we are speaking like this. Is a very different language when we are actually trading CFDs, where we can actually be excited with the fall and the rise. But then for physical traders out there, actual stocks trader, they can only talk and be excited in one-way traffic, which is going up kind of prices and trend that is bullish, but not for us CFDs traders. So that's why, you know, trading currencies, trading anything on CFDs is a both-way, two-way traffic. So we can actually analyze the market for the down market to enter sell, or up market to enter buy. So here for platinum, for our friends in the Latin Americas, this analysis is specifically for you on the technical side of it. We haven't actually really gone into the fundamentals or politics, geopolitics of current platinum pricing, but it has a lot to do with industrial demand for platinum, copper, silver, as well as gold, but mainly silver, copper, and platinum are very much industrial type. So we need to look at some fundamentals that I will research on and send to you guys as well quite soon. So here on platinum, it looks like it has a potential to fall at the 896.23 area. So what that means is that on this platform, if you were to click onto the sell button and then it manages to fall and reach there, you would actually be making a lot of money, especially if you're trading with 1 lot, 2 lots, or 3 lots, especially for commodity traders like yourself. You can actually, you know, look into trading quite well with bigger lots for it to actually enter the 896 area right here. So at this moment of time, it looks like it might correct itself a little bit more first, and then find another A, B, C, D downward. So this is where we want to look at the potential. If I were to sort of predict it based on patterns, what I can see is that if we were to mirror this move at this moment of time, this is still platinum we're talking about. If I were to take this area as my A, and then I pull this down here, I take this one and I predict that it will reach here. What I could see is that price would actually go up to this level right here. Okay, so there is a potential, only a probability of price going up correcting as high as 109. This is the worst case scenario to the 109.20 area, which is very interesting because it's exactly at the centroid of the yellow pattern. Okay, so what that means is the second pattern could look like this. So maybe now it is in a little bit of a correction. Whether this correction will really happen and go up to here or not, we don't know that. But at this moment of time, the bias is to the downside for platinum. Okay, so here, this is the second pattern potentially. Okay, and this is just to prediction only for how high platinum price could actually go before it come downwards. Okay, so now it traded and closed at 1023, so 1023 area. So if it were to go up, it needs to be driven fundamentally, something in the news, something fundamentally geopolitically as well, for it to drive price to 1092. But I think that could be a limit area right there anyway for resistance. Or what could happen tomorrow as well is for it to just go up a little bit and then trade downwards. But this is just a pattern. The red one is just a pattern that I'm drawing just in case it goes upwards first before it drops further. If it does go upwards and then correct at that area, it could correct as well. Right? Let's see at this Fibonacci area right here. So we have various resistance, 1027 at 38.2%. We have 50% here as well. I'm just drawing all the areas that it could actually turn back down, or resistance right here based on this pattern that I've just drawn in red. Okay, so there you go. Okay, there we go. So let's see. We'll take this one away. All right. So there you go. We have got the red pattern is just a prediction. If the market starts to go up, price starts to go up a little bit, it might reverse at 1027. If it goes up much more, it might reverse at 1050. Goes up much more, it might reverse at 1072. But I think the limit is at the 1091 area. So once it goes there and then start the reverse, it might then follow this pattern that I've actually drawn for platinum. I hope this is making sense for Juego, especially in Colombia, who is living in Peru. So basically, this is a session that usually I do it for not your group, but if you are watching this recording, this is something that you can distribute to your traders, Juego. Okay, okay. So that's basically it. This is for platinum. I know you guys have also been trained on the silver side of it. I'm doing a course for your group at the moment, 210 students or something like this, if I'm not mistaken. So they are going through, I think it's already 1 week that we're doing this silver and gold, sorry, not only silver and gold course. So I'm doing another course as well for the for Thailand. We haven't started yet for the Thailand student, but that's only for gold. So for your group, Juego, I think that the students who have actually registered, they are only for gold and silver, right? Because I've emailed you as well, but I think you've not replied to my email yet as of last week. So I think you're on holiday or something you've mentioned. So no problem with that. Just to keep you aware that I am actually doing that course already started with your group. Okay. All right, on gold and silver. So here, platinum, we have not checked about platinum yet. Okay, let's check. We've got somebody who just entered. Okay, Faisal, how are you doing? All right, welcome, Faisal. Okay, it's a course actually. It's not it's a course. Yeah, I'm running the certification course. It hasn't started, but yes, you can join that. It's a paid course, a certification program specifically for gold, but it's not only about trading gold, but it's to understand the politics, the everything about gold trading, physical gold trading, and CFD gold trading as well. If you are interested, I'll send you later on once I've completed the whole course content and everything, because we haven't actually started the course yet. It's going to take another week and a half, 2 weeks. Then I'll send you the whole information. Yeah, if you're interested. It's every week for 6 months, maybe two times a week webinar, 2 times a week, and then for 6 months stretch. Yeah, so many webinars. And we analyze the market as well, and then I present the PowerPoint presentation, and then you will have exams. In the 5th month, you will have the exams, and then we will test you on the analysis live as well, and then guide you through in trading. And then if you pass the exams, then you get an internationally recognized certification from ATI, Academy of Trading and Investment in London, ATI. So you will have the ATI logo, you have my Bretton logo as well. So whoever who attends the course could put that into the CVs as well. It's good for students, graduates as well, or anyone basically who wants to have a certification course. But it's a complete gold trading and investment program. Basically, I have devised that myself, and it's been picking up with a lot of demand with that, because a lot of people want to understand a little bit more about gold and how to invest it, whether it's physical, and what is paper gold, how to avoid, investing in physical gold that tells you it's physical, but at the end of the day, it's not physical. So a lot of people get cheated as well. So what to look at the contract and agreement to make sure that it is not a con, to make sure it's not fake as well, and to make sure you really can see your physical gold. So a lot of it are stored in Singapore at this moment of time. So I've got a lot of connection there for physical gold companies and banks that basically physically store your gold. They can also send the gold in physical form directly to your doorstep at home as well. They can send it to Dubai, Dubai can send it to Malaysia, and various other ways of doing it. But if it's in Singapore, it's very easy to have that sent through. Or for some companies, you can physically go to the bank, see your gold, and see it physically as well. Okay, and you can change and convert that physical gold at any moment of time. But this is why the course is for. The course is to actually enlighten people, educate people about gold investment, whether it's physical, whether you are trading. Of course, we'll cover technicals as well, as I have showed you on patterns, on price action, on various other things. So it's a overall 360 coverage, but also history of gold you need to understand, just so that you know the difference between before and now what is going on. So we will talk a lot more about all these fundamentals, repo, repurchase, yields, how exactly you can hear it and know that your investment will actually only go up in value as well. So yeah, this is going to be a very interesting course. So I've got demands for other courses as well, like Bitcoin and crypto, stuff like that as well. So I'm educating myself on crypto research as well. And then we've got certification on crypto, certification on Forex, certification on the geometric pattern itself only. So they are all going to be internationally recognized certification. So in the future, you can actually pick and choose which certification program you want, by which trainer, whether it's myself or, we will have a panel of speakers and trainers as well coming very soon from all over the world with different speciality. We might get someone who is really specialist in robots and EAs only, and telling you how you can actually create your own EA. We're still in the process of getting all these people. Hopefully it'll take another month or two, because it's a big process to really find people that you don't know, but they have that specialty. But we need time to also evaluate them, to know exactly that how we are going to collaborate, so that they don't just come in, steal all our leads and our students, and then go away and do their own stuff, because I have gone through that before in the past. So I want to find credible, trustworthy trainers and traders that are not only experienced, but they are trustworthy is the most important thing, so that they don't just make use of my community and students and then just exploit them and then get out of our collaboration, So that's always been the challenge that I have had. But we are in the process of really coming up with great certification programs that are very practical. So they are all going to be very, very practical, and basically helping traders to not only brush their skills, their knowledge, but also at the same time have a quality certification course and program. You have something on paper that can be proven of you actually trading and making money and learning some very important, great skills and knowledge as well. Okay. All right, that's it. I think that's all I have for you. I am going to go to the beach to actually do some work and analyze the market further, reading as well. But by the beach, it's been crazy weather here as well in Cyprus, in Limassol. So yeah, no problem, Alfred. So I will send you the links for all the courses, but we all of us will be updated for all the courses on the Bretton.Institute website anyway. Okay, it'll be updated. We will send out links and all that. Mr. Kunan will help me with that as well in all the groups. So everybody will be notified once we have all the courses. So the other thing I want to tell all the members as well is just that the member section of Bretton hasn't even started yet, but we've got about 50, almost 100,000, almost 100,000 members and community actually all over the world that will start to register and become they are all communities of traders that are active all over, but we haven't even started that membership portal yet because the course is not ready, the geometric patterns course that will be published there. So the other thing as well I want to tell everyone is that I've decided, I've spoken to Mr. Kunan as well, we decided not to actually charge all these membership and stuff like that, in the Bretton. So Bretton will have free membership. You can just register so that we know who are the members and all that registering and stuff like that. So we have your information, we know who you are, and then later on when we meet in person as well, we know you and stuff like that. So that is where we want to keep that there. But to sell my courses, I want to sell it, I wouldn't say cheaply, I want to sell it in an affordable price. So what I will do is that I will have all my courses, especially geometric courses and everything that I teach, even basics of Forex, crypto, all this kind of stuff. I will publish it in Udemy so that people could actually buy it in a very, very affordable price, maybe $20, $10, $50. It won't go up like crazy amount of money. So that way I can then make a little bit of money from majority of traders and my followers. And in that way, I can use the money to fund the Great Bretton Foundation. So what we want to do is we will be having the Great Bretton Foundation within the Bretton Institute website, which basically means that we will qualify and look at traders, smaller traders who need some funds, and we will actually fund them. Okay, so I will make money from the courses through you, but then we are going to donate that to the Great Bretton Foundation so that people who are lower than $200 depositors could actually be funded a little bit more so they can trade a little bit more as well. Okay, so that is the plan. A lot of courses have actually started with different groups, but the actual certification courses, no, they are still in the process at this moment. The actual certification courses has to go through the process with London, with the ATI in London. They have to evaluate all. I have submitted everything, basically, so they will approve. They already approved most of it. They're just looking through all the program to make sure that the quality is there. They asked me to adjust certain things or stuff like that. But in a matter of about 2 weeks max, we will have all these courses running. Yeah, so then I will send out all the links and you can actually register. They are all paid courses as well. And some of the brokers have actually decided that they want to sponsor some, but I have not made my decision yet to involve brokers or not in the certification program. So I'm not sure whether I want to do that yet, because I think we can also sponsor the some discount for the courses as well through the Great Bretton Foundation. But what I want to do as a criteria to sponsor people, whether it's for the course or for their trading through the Great Bretton Foundation, is through their physical trading itself. So if I, evaluate and give them some coaching, let's say 1 week, 2 weeks, and then tell them how they can trade, and then they followed and they have done very well in making profit from what I have taught them, then I think that could actually help me to evaluate them better and qualify them for some funds, to actually reward them with some funds, whether it is for a course that they want or for the because I think it's best to evaluate traders from their performance itself, you see. So if I give someone a coaching, let's say, and then they want to qualify to actually get some funds, then their performance from what I have taught them, if they manage to absorb that really well, then it will train their discipline, their focus and patience as well at the same time. Then I see that, yes, they manage to follow and then grow their own trading account. Then I think they deserve to actually be rewarded with some more funds to actually fund whatever they want, course or their trading. Okay, I think that is probably fair. So that's the objective mission of the Great Bretton Foundation that I'm thinking of within the Bretton Institute, just to help traders to fund their traders, just give them a bit of a boost, or if they want to learn and get certification, then they want to also buy the certification, buy the course to gain the certification, and they need a little bit of funding, then we can actually use the Great Bretton Foundation in doing that. But I want to evaluate people from performance as well, real trading performance. Then I reward them for listening and following and everything else, and then they get the money out of that. Okay, we reward them with their performance and their hard work. Okay, all right, so that's basically it. Huego, I just got a message from you now. Yeah, so let me just check. Okay, yeah, we'll reply to you on that. Okay, all right, guys, I think that's all I have for you guys. I'm just going to the beach today. It's been really crazy weather as well. So, okay. All right, thank you. You guys too. Enjoy your Sunday. It's Assumptions as well today. It's rain. At least it's cooling a little bit. Here, I wish it rained a little bit now. So you see that it is at 33 degrees, right? But this is since very early in the morning, and the 33 degrees is hot and dry 33 degrees Celsius in Limassol. So it's not the same as the 33 degrees in Asia. We can actually reach 40 degrees as well. As you can see, it's predicted to be even more than that. And it's all very bright, sunny, and it's a good day for the beach and just sit down by the beach and stuff like that. If not, it's just too hot. Okay. Past few days. Okay, we hope it will probably rain as well at some point, but not this month, I think, because it's just too hot. So yeah, that's the Limassol weather at this moment of time. So I'll be making some more, because I go to the sea as well and make some videos there for the Bretton Institute courses. So what will also happen is that a lot of short courses that I have done and recorded for other brokers, I'll be submitting it all in Udemy as well. So the course that I will be doing for Bretton Institute, the geometric patterns course, not geometric trading method, is two different things. Yeah, geometric trading method is the overall price pattern, how you start and stuff like that, following exactly what I do in analyzing and trading the market. But geometric patterns course is just about the pattern. So that would actually consist of, let's say, 30-40 videos as well. And I will post it, publish it on Udemy, and basically post it for a very low price, maybe $29.99, maybe $19.99, something like that. So to help traders as well with that. Okay, so I will be putting lots of courses on Udemy and give you guys links, and you guys can actually get that. So I can also do certification courses through Udemy as well, if you get that, and then we can discuss about certifications as well for those interested. Okay, guys, I've got to go. And so with that, I want to thank you for your time this Sunday to join me. And you guys have a great Sunday, and we'll see you guys tomorrow in tomorrow's Bretton's Monday session, Monday's week ahead session. Okay. All right, guys, take care. Thank you so much. And we'll see you guys again soon. Bye-bye.